Hi everyone, a very good evening to all of you watching this video. I welcome you all to the free rankers batch over here. And today's agenda is that we are going to cover MCQs on financial stability report, which is one of the most important reports from your exam point of view. Right? I hope you have done the financial stability report in detail. I hope you have covered it already in detail. Today's agenda is that we are going to cover maximum MCQs that we can. Okay? Just let me know in the comment section whether my audio and video is clear, all of you, so that we can have the class in a smooth and continuous manner. And if you want to download this YouTube class PDF, you can do it from the Oliveboard app. You can go to the courses section. There's going to be a separate YouTube class PDFs folder. You can download the PDF from here. All right. ठीक है? Apart from that, if you want to connect with me beyond these sessions, then Mannat Educator is my Telegram handle. Just type Mannat Educator. I also keep updating you with the classes that I take. ठीक है, Mannat Educator type कीजिए and then uh, you will have access to my group. Let's start with our session. And before that, I have an announcement to make that if you want to join this revision batch for RBI Grade B, you can. This is a rapid phase 1 revision wherein you will cover 10 QRE practice classes, 8 PIB plus RBA circular masterclass, 35 high value GA MCQ sessions, and phase 1 mocks plus magazines will be available to you. If you want, you can enroll now. Good evening, John. Very good that you have been consistent with all your classes. I really hope that you're going to clear the examination. Chalo, the first passage we have, question 1 to 7, will be based on this passage only. Okay, so let's quickly read this out. I want you guys to give me the answer. Whenever you give me the answer, write the number of the question as well. Okay, now amidst elevated global economic and trade policy uncertainties, the Indian economy continues to display resilience underpinned by strong macroeconomic fundamentals and robust financial system. The economy is growing at a healthy pace, with the financial system meeting the financial needs of all sectors of the real economy. At the same time, domestic financial stability risks remain contained as reflected in improving asset quality, strong capital and liquidity buffers, and robust profitability of banks and non bank lenders. The volatility in domestic financial markets also remain relatively low. The question is going to be the first question. Let's see what is the first question. The RBI has projected the real GDP to grow at dash percentage in 2025-26. So we are talking about what? The real GDP growth is projected at what according to this financial stability report? 6.2, 6.3, 6.5, 6.8 or 7%. What is the answer to this question? Anurag Singh has given me the answer. Abhigyan has given me the answer. John has also given me the answer. Anybody else would like to answer? Anurag is saying C, 6.5. John is saying 6.8. Abhigyan is saying 6.8. The answer to this question is 6.5 because we're talking about the financial stability report over here, right? So it is 6.5%. Of course, updations and all keep happening, right? ठीक है चलिए. So RBI has projected real GDP to grow at 6.5% for 25-26, same as in 24-25, supported by buoyant rural demand, revival in urban demand, uptick in investment activity. ठीक है, all these are some reasons. ठीक है, चलिए. Second question. According to the financial stability report by the RBI, identify the correct statements. Domestic inflation has been steadily declining, with the headline CPI inflation recording a 6-year low of 2.8% in May 2025. The outlook for food inflation remains bleak on account of rising prices and erratic monsoon. The risk of imported inflation largely remains high because of the recent escalation of the geopolitical tensions in the Middle East. The near term and medium term outlook gives greater confidence of a durable alignment of headline inflation with the target of 4%. You have to identify the correct statements. 1 and 3 only, 1, 3 and 4 only, 2 and 4 only, 2 and 3 only, or 1 and 4 only. Yes, Parmeshwara, that is what I said, but this is financial stability report of June. So we have to go according to June. Okay? Okay, Parmeshwara? I know, revisions keep on happening. Plus, other different organizations give different projections. IMF is going to have a different projection. World Bank is going to have a different projection, right? RBI is going to have a different projection over a period of time. Revisions can be done. Fitch, Moody, they all give their projections. But here we are talking about the financial stability report. Okay, and according to financial stability report, you have to answer. Is that okay, Parmeshwara? Have you understood this? चलिए second question, B, B, A. The answer to this question is E. Not B, not A. The answer is E. 1 and 4 only. ठीक है? So first is correct, fourth is correct. These two are not correct. So domestic inflation steadily declining with headline CPI inflation recording a 6-year low of 2.8% in May 2025. Outlook for food inflation remains favorable on account of softening prices and robust crop production. Moreover, the risk of imported inflation largely remains low, with anticipated slowdown in global growth likely to soften commodity and crude oil prices. Recent escalation of geopolitical tensions in the Middle East has led to heightened uncertainty. Near term and medium term outlook gives greater confidence of a durable alignment of headline inflation target of 4%. Right? So this is correct. First is correct. Outlook for food inflation remains bleak on account of rising prices, not rising prices, but falling prices. Risk of imported inflation largely remains high because of recent escalation of geopolitical tensions in the Middle East. We are talking about geopolitical tensions. It is going to soften commodity and crude oil prices, not increase. Okay, because there's an anticipated slowdown. I hope this is clear to all of you. According to Financial Stability Report by RBI, identify the correct statements. India's public debt levels and primary deficit have remained relatively on the higher side compared to peer emerging markets. India's government debt is predominantly dollar dominated. India's fiscal position and credibility has enhanced significantly in recent years. 1 and 2 only, 3 only, 1 and 3 only, 2 and 3 only, or 1, 2 and 3. What is the answer? Third question, C, B, D. So your answer is C, 1 and 3 only. So first is correct. India's public debt levels and primary deficit have remained relatively on the higher side. Third is also correct. India's fiscal position and credibility has enhanced significantly in the recent years. India's government debt is predominantly dollar denominated. No, it is not dollar denominated. ठीक है? So you can see here India's public debt levels, primary deficit, and share of interest payments have remained on the higher side. India's fiscal position and credibility has enhanced. This is correct. ठीक है? And in addition, government debt is predominantly rupee dominated and not dollar denominated. Okay, it is rupee denominated. Yes, Abhigyan, absolutely correct. India's current account deficit stood at dash percentage in 24-25. 0.4%, 0.6%, 0.8%, 1%, or 1.2%. Fourth question. 0.6%. Abhigyan is saying B. Anurag B. Parmeshwara is saying E. John is saying B. The correct answer is B. It is 0.6%. ठीक है, it is 0.6%. ठीक है? So current account deficit is 0.6% of GDP during 24-25. As of 20th June 2025, India's forex reserves stood at dash $697.9 billion, $707.9 billion, $657.9 billion, $757.9, or $797.9 billion. We're talking about as of June. And we're talking about what? Forex reserves. Fifth question. Abhigyan, John have given me A as the answer, which is absolutely correct. So it is 697.9 billion. ठीक है? Okay. India's external debt stood at dash percent of GDP at end March 2025. 19.1%, 18.1%, 20.1%, 19.4%, or 20.4%. Question number 6. What is the answer? Began says 19.1. Okay. Then John is saying B, and Rag Singh is saying A, which is absolutely correct. The answer is 19.1%. Okay. So India's external debt stood at a moderate 19.1% of GDP at end of March 2025. Okay. Identify the correct statements according to RBI's June financial stability report. First, net FDI flows in India increased due to low repatriation and low outward FDI. Foreign portfolio investments increased during 24-25. One only, two only, both one and two, or none of the above? What is the answer? Seventh question. Two only, Abhigyan is saying. D, none of these. Anurag, Vinod is saying both one and two. Anurag is saying B. The answer to this question is D, none of these. So, in the capital account, high gross FDI during 24-25 indicates that India continues to remain an attractive investment destination. Net FDI flows moderated due to higher repatriation. So, there was higher repatriation, okay, not lower. So, first is wrong. And net outward FDI, foreign portfolio investments, moderated during 24-25. So, not increased, moderated. ठीक है. Chalo. According to IMF, global public debt as a percentage of GDP is projected to reach above dash percentage this year and dash percentage by the end of the decade. Global public debt 0, 90, 595, 90, 95 or 500. Reach above dash percentage this year and dash by the end of the decade. Very easy question. The answer is D. It should be 95. And actually, the options are only wrong. There should be 9 over here. ठीक है 95, 95, 90, 90. Options are only wrong. So your answer is D, 95% this year and 100% by the end of the decade. है ना? So options are only wrong. ठीक है? These are so extreme. है ना? 0, 90, 5, 95. So options are only wrong. So let's leave this question. ठीक है? Ninth question. Citing escalation in trade tensions and elevated policy uncertainty, IMF in its April 25 World Economic Outlook has revised global growth projection downwards to dash percent in 2025 and dash percentage in 2026. 2.6, 3, 2.8, 3, 2.8, 3.2, 3, 3.5 or 2.6, 2.8. Question number 9th. Abhigyan and Anurag are saying B. Abhigyan is saying B, Anurag is saying C. Anybody else who would like to answer? John is saying C. So the answer to this question is B. It is downwards to 2.8% in 25 and 3% in 2026. Your answer is B, 2.8, 3. So those who give me B as the answer is correct. Only Abhigyan has given me B as the answer, right? So very good, Abhigyan. It is 2.8 and 3%. Okay. Chalo. The World Bank, in its June 2025 Global Economic Prospects, projected global GDP growth using PPP weights to decelerate from 3.3% in 24 to dash in 2025. 2.8%, 2.9, 3, 3.1 or 3.2. 10th question. So the correct answer is B. ठीक है Bhigyan has given me the correct answer. Not D, John, not A, Anurag. ठीक है the correct answer is B, 2.9% in 2025. ठीक है okay. Now, question 11 to 14 are based on this paragraph. Let's quickly read this out. The April 2025 market turmoil brought into focus a few key market vulnerabilities. First, valuations of US stocks, which form nearly 55% of global equity market, remain stretched by historical standards. The forward price to earnings ratio, the ratio of equity prices to expected 12-month earnings, is well above the historical median. An equity risk premium, a measure of additional return investors require to buy stocks relative to risk free bonds, has declined to decadal low levels. Moreover, to justify current valuations, corporate earnings must grow at a robust pace, which may be difficult in an uncertain economic environment. Further price corrections and elevated volatility in US equities could spill over to other markets, especially emerging market economies like India. Okay, so 11th question we have over here in the context of the passage. What does a decline in equity risk premium (ERP) to decadal low levels imply? What does this mean? A option: investors now expect higher returns from equities compared to bonds. Equities have become more attractive relative to risk free assets. The additional compensation investors demand for holding equities has decreased. Corporate bond yields have increased significantly. Risk free interest rates have fallen drastically. 11th question. What is the answer to 11th question? What do you think? What does a decline in the equity risk premium mean? Okay, so all of you are saying C, which is absolutely correct. Okay, the additional compensation investors demand for holding equities has decreased. So ERP's expected return on equities minus the risk-free rate. So a decline in ERP means investors are accepting less extra return for taking an equity risk. So their return is less. That means there's overvaluation or complacency about future risks. Okay? So yes, C is absolutely correct. Very good. 12th question. The passage states that the forward price to earnings ratio is well above the historical median. What does this likely indicate? Markets expect a steep decline in future corporate earnings. Equity prices are low relative to expected earnings. Stock valuations are higher relative to their expected earnings. Companies are distributing higher dividends than usual. Bond markets are outperforming equity markets. What is the correct answer for this question? 12th question. What does this mean? So everybody is saying C, which is absolutely correct. So high forward P by E ratio suggests investors are paying more for each unit of expected future earnings, which means overvaluation or optimism about growth. 13th question. According to the passage, why is robust corporate earnings growth necessary to justify current stock valuations? Because higher interest rates demand higher earnings. Because elevated equity valuations are sustainable only if future earnings rise significantly. Because investors are shifting from bonds to equities. Because inflation expectations have increased. Or because equity risk premium is high. 13th question. Abhigyan, John have given me B as the answer. Anurag is also saying B. So the correct answer is B. When valuations are high, future earnings must grow rapidly to make current prices appear justified. Okay, otherwise stocks are deemed to be overvalued. Based on the passage, what is likely impact on emerging market economies like India if US equities undergo price corrections and elevated volatility? Increased capital inflows into emerging market economies, decreased volatility in emerging market economies due to market decoupling, strengthening of EME currencies, negative spillover effects on EME markets, rising foreign direct investment in the emerging market economies. 14th question. John has given me D as the answer. Anybody else? Began is saying B. The correct answer is D. Negative spillover effects on emerging market economies. So US equities, they form approximately 55% of the global market. So if there's any kind of volatility in the US equity market, and any kind of volatility in the US, it can lead to global risk off sentiment. It can lead to capital outflows, volatility in the emerging market economies. Okay? So the answer is D, not B or not any other option. What does the dollar smile theory suggest about the performance of the US dollar? Dollar smile theory. The dollar performs best when the US economy is growing moderately with low inflation. The dollar weakens during both strong and weak economic conditions. The dollar strengthens during both economic booms and crises but weakens during moderate growth. The dollar strength depends only on interest rate differentials. The dollar follows no predictable pattern and is driven entirely by speculation. 15th question. What does this dollar smile theory suggest? 15th A, 15th C. The answer is C. The dollar strengthens during both economic booms and crises but weakens during moderate growth. This is what is known as the dollar smile theory. Read about this in detail. Okay, this is your homework. Okay, so what happens during this dollar smile theory? US dollar tends to strengthen on the left side of the smile. Left side of the smile. This is your moderate, है ना? Left side of the smile during times of global crisis or recession due to its safe haven status. So this is your this is how a smile looks like. है ना? This is your moderate wala period. This is your left side of the smile and this is the right side of the smile. So in left side of the smile, during your you can consider as recessionary period and all. During that time, dollar performs well. Okay, and on the right side, when the economy is very strong, then a lot of capital is attracted. There are so many inflows in the US. In that case, again, the dollar performs well. But in case of moderate growth, dollar tends to be weaker as compared to the left and the right side of the smile. Okay, this is what is meant by the dollar smile theory. Okay. 16th question. In the current episode of exceptional economic uncertainty, the prices of US financial assets, including equities, have fallen, forcing global investors to rebalance their portfolio. This has contributed to the depreciation of the US dollar as growth slowdown fears and fiscal worries continue to weigh on the dollar. Which of the following instruments were used by Reserve Bank to inject durable liquidity during the first half of 2025? Standing deposit facility, bank rate hike, and cash reserve ratio hike. Treasury bill auctions, marginal standing facility, and liquidity adjustment facility. OMO purchases, buy sell swaps, term variable rate repos, increase in SLR, market stabilization scheme, foreign exchange reserve, quantitative tightening measures, and short term borrowing limits. 16th question. C, which is absolutely correct. Open market operations, buy sell swaps, and term variable rate repos, absolutely correct. In order to inject how much? 9.5 lakh crore of durable liquidity into the system. What is the expected impact of the staggered 100 basis points cash reserve ratio cut announced by RBI? Increase in interest rates and tightening of liquidity, absorption of 2.5 lakh crore from the banking system, release of 2.5 lakh crore of primary liquidity between September and December 2025, direct reduction in banks' net interest margins, shift of liquidity from surplus to deficit. 17th, you are saying C, Anurag C, Abhigyan C, John C, which is absolutely correct. ठीक है, release of 2.5 lakh crore of primary liquidity between September and December 25. How have the RBI's liquidity and rate cut measures contributed to monetary policy effectiveness? They increased bond yields, making borrowing costlier. They delayed monetary transmission to credit markets. They improved monetary transmission by easing financial and credit conditions. They reduced the availability of bank credit for long term loans. They led to appreciation of the Indian rupee. 18th, Abhigyan, Ashish, Anurag, and John have given me C as the answer, which is absolutely correct. Liquidity injections and rate cuts, they support faster transmission of policy signals. Right? What indicated the tightening of domestic financial conditions during Jan to March 2025? Rise in forex reserves, decline in inflation expectations, strengthening of the rupee against the dollar, widening of money and corporate bond market spreads, reduction in repo and reverse repo rate corridor. 19th question. Ashish has given me B as the answer. Anybody else? John, Anurag, Abhigyan? What about you guys? So the answer is D and not B, Ashish. ठीक not B, John. Yes, Anurag Singh, D, absolutely correct. Widening of money and corporate bond market spreads. ठीक So widening spreads indicate that borrowing costs have increased in these markets, reflecting tighter financial conditions. Okay. The development of a robust repo market enhances liquidity and efficiency in the corporate bond market. Accordingly, when was the AMC repo clearing limited operationalized? January 23, July 23, January 24, July 24, or January 2025? When was AMC repo clearing limited ARCL operationalized? Anyone? Any idea? 20th question. Anurag is saying D. Anybody else? The answer is B. It is July 2023. Okay. Not D. It's July 2023. The development of a robust repo market enhances liquidity and efficiency in this corporate bond market. So AMC reporting, AMC Repo Clearing Limited was operationalized in July 23 as a limited purpose clearing corporation for providing clearing and settlement services as well as settlement guarantee for tri-party repo and corporate debt securities. Okay. India's household debt has been dash in recent years. Is it increasing or decreasing? As on end December 2024, India's household debt was at dash percentage of GDP at current market prices, increasing 41.9 or 44.2 or 40.6, decreasing 41.9 or 40.6. A, B, C, D, E, what is the answer? 21st question. Anurag and Ashish have given me. Acha, Anurag says A. Ashish says C. Abhigyan D. So anybody who wants to say B or E, है ना? Your answer is A. It has been increasing in recent years and at 41.9% of the GDP. So who gave me A as the answer? It was Anurag. Absolutely correct. It has been increasing in recent years and India's household debt was at 41.9%. Okay? Which of the following categories of loans form the highest share of household debt in India as of end March 2025? Housing loans, agricultural loans, business loans, non housing retail loans, or education loans? 22nd. Vigyan and Ashish have given me D as the answer. John says A. Anurag says B. The answer is D. Non housing retail loans. So, Vigyan and Ashish have given me the correct answer. So, it is the non housing retail loans. Okay? Okay. What was the gross NPA for scheduled commercial banks at the end of March 2025? Gross NPAs for scheduled commercial banks. 2.6%, 2.8%, 2.4%, 2.3%, or 2.1%? 23rd question, A, D, Namita says B, Anurag is saying D. The correct answer is D, which is 2.3%. Okay? Gross NPAs of scheduled commercial banks 2.3%. According to Financial Stability Report by RBI, which of the following factors has contributed to the soundness of scheduled commercial banks in India? Low CET1 uh, capital, reduced provisioning and limited exposure to households. High CET1 capital, improved asset quality and robust profitability. Increase in NPAs, negative credit growth, declining earnings. Stable inflation, strong export growth, increasing bond yields. Higher CRR, declining CASA ratio, risk averse lending. What's the answer? 24th question, B, B, B. Anybody else? B, which is absolutely correct. High CET1 capital, improved asset quality, and robust profitability. What does the term credit impulse most accurately refer to in macroeconomics? Credit impulse. The total outstanding bank credit in the economy, the rate at which interest is charged on loans, the change in the flow of new credit as a percentage of GDP, the proportion of non performing loans to total advances, the growth rate of personal loans compared to industrial credit. 25th question. All of you are saying C, which is absolutely correct. The change in the flow of new credit as a percentage of GDP. So, credit impulse is the change in new credit issued as a percentage of GDP. Okay, it captures the change in credit between time t and t minus 1 between two time periods as a percentage of the 4 period rolling average of quarterly GDP at time t minus 1. What risks to bank performance are highlighted in the Financial Stability Report due to changing credit conditions? Increasing demand for credit due to high economic growth, surging inflation increasing bank profitability, negative credit impulse and potential slowdown in credit demand, increase in CASA deposits reducing interest income, or strong rupee appreciation eroding profitability. 26th, all of you are saying C, which is absolutely correct. So, as the credit growth has slowed, credit impulse has turned negative, and an economic slowdown could further weaken credit demand and asset quality. Okay. As per RBI guidelines, how is a loan account classified as SMA2? When the principal or interest remains overdue for more than 90 days, for non revolving loans, if overdue remains up to 30 days, for revolving credit facilities, if the outstanding exceeds the sanction limit for 31 to 60 days, for any loan account, if overdue remains between 31 to 60 days, for non revolving loans, if overdue remains between 61 to 90 days. 27th question, very easy question. Ashish has given me E as the answer. Anyone else who would like to answer? SMA2, special mention account 2. 27th answer is E. What is it? What is special mention account? For loans with revolving facilities like cash credit overdraft, if outstanding balance remains continuously more than the sanction limit or drawing power, whichever is lower, for a period of 31 to 60 days, SMA 1, and 61 to 90, SMA 2. For loans other than revolving facilities, if principal or interest payment or any other amount wholly or partly overdue remains outstanding up to 30 days, is SMA 0, 31 to 60 days SMA 1, 61 to 90 days SMA 2. ठीक है? Okay? चलो. The NBFC sector in India remains healthy with strong capital buffers, robust interest margins and earnings, and low levels of impairment. The gross NPA ratio of NBFC sector at the end of March 25 was 2%, 2.5%, 3%, 3.15%, or 4%. 28th question. 28th, Ashish and Anurag have given me D as the answer, which is not correct. The answer is 3%. ठीक है? Gross NPA ratio of NBFC sector at end of March 2025, 3%. Okay? Gross NPA 3%. NBFCs, including housing finance companies and fintech firms, account for more than dash percentage of personal loans below 50,000. 60, 70, 80, 90, or 50. 29th question. Anybody? Anurag has given me C as the answer. Anybody else? Ashish, John, Abhigyan, what about you? The answer is C, which is 80%. Okay. So, NBFCs, including HFCs and fintech firms, they account for 84.3% of personal loans below 50,000. So, approximate answer over here is 80%. The assets under management of domestic mutual funds industry continued to grow and reach a record high of rupees dash lakh crore in May 2025. 71.2 lakh crore, 72.2, 73.2, 74.2, or 75.2 lakh crore. What is the answer? 30. Anurag has given me B as the answer. Hmm, hmm. John has given me D as the answer. Anybody else? Quickly, I want answers quickly from all of you. So the answer is B, which is 72.2. 72.2 lakh crore. ठीक है? Okay, in May 2025. So your answer was B, and Anurag gave me the correct answer, right? Chalo. As per RBI's systemic risk survey conducted in May 25, which of the following risk groups were perceived to have increased compared to the previous survey? Financial market and climate risks, global and institutional risks, macroeconomic and financial market risks, cyber and macroeconomic risks, or institutional and credit risks. Anurag has given me B. Ashish also B. Anybody else? So the answer is B. Very good. Global and institutional risks. ठीक है? So global and institutional risks were perceived to have increased compared with the previous survey round. Which of the following risks were assessed as high risk subcategories in the May 2025 SRS? Inflation, credit default, and housing market risk, interest rate risk, liquidity risk, NBFC failure, geopolitical conflict, equity price volatility, cyber risk, exchange rate risk, commodity price fluctuation, debt servicing, tax policy changes, fintech disruption, and sovereign rating downgrade. Sorry. 32nd question. 32nd question. Ashish and John are giving me C as the answer. Anyone else? The answer is C, absolutely correct. Geopolitical conflict, equity price volatility, and cyber risk. Identify the correct statements with respect to deposits of scheduled commercial banks. The aggregate deposits, the aggregate deposits grew at 10.7% year on year during 24-25. Growth in savings account deposits continued to outpace that in current and term deposits. One only, two only, both one and two, or none of these. 23rd question, Anurag and Ashish have given me A as the answer. Anybody else? So your answer is A, very good, one only. So SCB's aggregate deposits grew at 10.7%. That's absolutely correct. Growth in term deposits continued to outpace, not saving account deposits, term deposits. ठीक है? So outpace current and savings deposits. ठीक है? Identify the correct statements with respect to credit growth of scheduled commercial banks. SCB's credit growth decelerated in 24-25 across bank groups. credit growth of private sector banks outpaced that of public sector banks during the year after more than a decade. The shares of agricultural and industrial loans in aggregate credit have expanded, while those of services and personal loans have contracted over the last fiscal year. Personal loans and services loans continue to remain the top two contributors to the overall credit growth of SCBs. One only, one and two only, two and three only, one, three and four only, or one and four only. The fourth question, the answer is E, 1 and 4 only. Absolutely correct. Okay. So SCB's credit growth decelerated in 24-25 across bank groups. Credit growth of public sector banks outpaced private sector banks during the year. As on June 13-25, year-on-year credit growth of scheduled commercial banks moderated to 9.6%. Shares of agriculture and industrial loans in aggregate credit have contracted, and services and personal loans have expanded. Okay. 35th question, dash sector has continued to record the highest gross NPA ratio. MSME, agriculture, services, personal loans, or industry? Good evening, Madhur. All good. 35th question, Anurag B, Aditya, agriculture, John B. The answer is agriculture sector, which continued to record highest gross NPA. Okay, so agriculture sector, absolutely correct. Identify the correct statements with respect to capital to risk weighted assets ratio of scheduled commercial banks. Firstly, as of March 2025, the capital to risk weighted assets ratio of scheduled commercial banks increased to a record high of 17.3%. Public sector banks reported higher CRAR in March 25 compared to their September 2024 positions, whereas private sector banks reported lower CRAR in March 25 compared to their September 2024 positions. One only, two only, both one and two, or none of these? Excuse me. Excuse me. Sorry. So the answer is one only. As of March 25, the capital to risk weighted asset ratio of scheduled commercial banks increased to a record high of 17.3%. This is correct. All bank groups reported higher CRAR in March. Okay, not only public sector banks. Okay, the increase in CRR during quarter ending March 25 can be attributed to higher growth in total capital relative to growth. Okay, चलिए. Question 37 to 40 is based on this paragraph. So here we have marked A, B, C, D है ना. So you have to answer these only. ठीक है. Credit extended by primary urban cooperative banks registered a dash year-on-year growth or decline of 7.4% in March 2025 than that in March 2024. So read this question carefully. Credit extended by primary urban cooperative banks registered dash year-on-year decline of 7.4% in March 2025 than that in March 2024. ठीक है, so what will come in place of A? Lower, moderate, higher, constant, or stunted? Here, registered a dash year on year growth decline. Lower, moderate, higher, constant, or stunted? 37th question. A, B, C, D, or E? Credit extended by primary urban cooperative banks. We're talking about primary urban cooperative banks over here. Lower, moderate, higher, constant, or stunted? 37th question. Anurag is saying B, but the answer is C. Higher year on year growth decline. ठीक है? Higher year on year growth decline. Hmm. Then B. Non-scheduled urban cooperative banks witnessed dash in credit growth. Non-scheduled urban cooperative banks. ठीक है? In case of B, non-scheduled urban cooperative banks, they witnessed dash in credit growth. Dash in credit growth. Acceleration, deceleration, revival, decrease, or spurt? 38th question. We're talking about non-scheduled urban cooperative banks. What about their credit growth? We saw acceleration, deceleration, revival, decrease, or spurt? Increase. Hmm. Hmm. 38th question. Quickly. The answer is A, acceleration. So here, acceleration in credit growth. ठीक है हाँ yes John A, not C, acceleration. Okay, चलिए next statement. The capital position of urban cooperative banks continue to strengthen in the post pandemic period, with the CRAR rising to dash percentage in March 2025. So we're talking about CRAR of these urban cooperative banks. What is the CRAR of urban cooperative banks? 16%, 17%, 18%, 19%, or 20%? 39th question. CRAR of urban cooperative banks. The answer is C, which is 18%. Okay, so the answer is 18% here, rising to 18% in March 2025. Okay, the strengthening of capital position has been broad based across scheduled urban cooperative banks and non-scheduled urban cooperative banks, as well as across all tiers, barring marginal dip for the dash UCBs. What is the answer? What will come in place of D here? Dash UCBs. Tier 1, Tier 2, Tier 3, Tier 4, or Tier 5? Which tier? Tier 1, 2, 3, 4, or 5? Marginal dip for what? For dash UCBs. I'm writing over here options. Tier 1, Tier 2, Tier 3, Tier 4, Tier 5. A, B, C, D, or E? What is the answer? The answer is A, Tier 1. ठीक है चलो as per RBI's latest stress testing exercise, which of the following statements is correct regarding urban cooperative banks? All UCBs regardless of asset size were included in the stress test. Only UCBs under all inclusive directions were tested. Stress testing was conducted for 213 UCBs with asset size over 500 crore, excluding those under AID. The stress test was based on projected financials for March 2026. UCBs with asset size below 500 crore were given priority in stress testing. 41st question. Anurag is saying C, which is absolutely correct. Stress testing was conducted for 213 UCBs with asset size over 500 crore, excluding those under all inclusive directions. Okay, right. Okay, 42nd question. UCBs in tier 2, 3, and 4 need to achieve CRAR of at least dash percentage by March 31, 2026, according to RBI guidelines. 11%, 12%, 13%, 14%, or 15%. 42nd question. CRAR of at least how much percentage by March 31, 2026, according to RBI guidelines? And we're talking about tier 2, 3, and 4 UCBs. So the correct answer is B. 12% should be the correct answer. Okay, 12%. Okay, so the regulatory minimum CRAR for tier 1 UCBs is 9%, and for UCBs in tier 2, 3, 4 is 11%. Further, UCBs in tier 2, 3, and 4 shall achieve CRAR of at least 12% by March 31, 2026. Currently, it is 11%. Okay. 43rd question. The solvency ratio of an insurance company assesses the ability of the insurer to meet its obligation towards policyholders by reflecting the level of its assets over liabilities. The minimum solvency ratio prescribed by the Insurance Regulatory and Development Authority of India for insurance companies in India is dash percentage: 80, 100, 150, 200, 250. How much percentage for insurance companies? Minimum solvency ratio we are talking about here. Abhigyan says 150%. Anybody else? So the answer is 150%, which is absolutely correct. Second last question for today. The DICGC extends insurance cover to depositors for all the banks operating in India. As on March 31st, 2025, the number of banks registered with DICGC was dash 1282, 1582, 1982, 2182, or 2382. Number of banks registered with DICGC, Deposit Insurance and Credit Guarantee Corporation. 1982 Abhigyan is saying, which is absolutely correct. 1982. ठीक है? हाँ, yes, Anurag, 1982 is absolutely correct. John, not D, 1982. Last question for the day. With the present deposit insurance limit of 5 lakh, more than dash percentage of the total number of deposit accounts were fully insured, and more than dash percentage of the total value of all accessible deposits were insured as on March 31st, 2025. 95-40, 95-80, 80-40, 75-75, or 95-75? 45th question. Quickly give me the answer. Abhigyan has given me A as the answer, 95 and 40. Anybody else? So the answer is A, 95%, more than 95%, and your 40%. ठीक है? 95 and 40 Abhigyan. ठीक है? चलिए, so that is all from my side, everyone. If there's anyone new over here and you want to connect with me beyond this session, Mannat Educator is my Telegram handle. You can connect with me here. Otherwise, let's end the session over here. And if there's any doubt, you can ask me, and we'll meet up in the next session now. Clear, everyone? Just let me know in the comment section. Then I'll end the session over here. Chalo then, let's end it over here. Thank you so much, everyone. Have a good night and see you all in my next